Alright, so the tenure of the loan. Now this is the part whereby it's important to understand how long should I borrow money. Right now, of course, we are all endowed with the Asian value. Our parents say, you know, don't borrow, pay off your debt as early as possible. Now, yes, I do agree with living debt free, but again, you got to be smart about managing debt. Now, if you can borrow money at a very low rate, you want to stretch out the loan tenure, right, as far as possible so that your monthly payments are lowered. Now, if of course you have the capability to later pay off your loan, it's okay. Now, why you want to stretch out your loan tenure? So it gives you flexibility and option. Now, imagine this. If you take a 15-year loan tenure, right, and later halfway through you want to refinance your property, our local environment will take your rundown rate and refinance that same rundown rate. So it's quite difficult to extend that rundown rate based on your age. Now there's a maximum age that you could actually borrow to here in Singapore, right? So over here, your maximum tenure for taking on a loan is up to age 65. All right. So for HDB, your maximum loan tenure is 30 years, but if you're buying a new flat, it's only 25 years. So this is a confusion. Most people think I can borrow 30 years, but a lot of time when it comes to new flat, your maximum loan tenure is 25 years. Now this is HDB's way of telling you to cut it down. You know, let's not stretch it 30 years, 25 years is good enough. All right, so go for that 25 years. Give yourself more room and option in your future, because right now maybe you think you could afford to pay more, right? And then you reduce that tenure hoping to pay off as soon as possible. That's a good thing, right? That's a good thing. However, you are closing your doors to future options that you're not aware of. So again, when you lose your job, you've got no CPF contribution, you realize that you can't keep up with that high mortgage that you are servicing, right? Because again, your capability of service is based on your income earned with a job. Now, if you're without a job, that becomes a problem servicing a loan. So these are all important strategies why you want to sit down with a financial advisor to plan all the strategy out, right? So again, their job is to sit and think through you what else you could do, right? So first of all, the loan tenure, right, up to 65, less of the buyer's age. Right, so maximum 25 years or 65 years old, whichever is lower. Okay, so that's the maximum tenure you can take on HDB. Now on private loans, the maximum loan tenure is 35 years. However, the cap is still ceiling at 65 years old of the borrower. Okay, so that's the loan tenure that you can borrow to. Now, if you ask me, I would still take the maximum loan, because once you stretch that maximum loan, again, repayments are low, and again, you have future option to pay off and cut that loan off the moment you are financially capable. All right, but why you want to do that is to have lesser monthly repayment. Now, market condition is also good that borrowing money here in Singapore is very, very affordable. Interest rates are very low. So it's okay to borrow money when interest rate is low, right? Let me explain that to you a little bit more later on as we do the math behind it. All right, but I'll go through some of the difference between a HDB loan and a private bank loan. Now, this is the part whereby it's a little bit worse off, right, comparing with HDB loan and bank loan. Now, HDB loans, if you are late in repayment, right, doesn't mean that, oh, HDB would just let you wait out. They would actually accrue interest at 7.5% of your loan, right? So again, most people are having the impression that, oh, if you don't pay HDB, they would actually allow that, right? Basically, no institution could sustain that if everyone don't pay for their loan. So there's a penalty for late payment, it's at 7.5%. Now, at the bank, the rates is a lot higher, right? It's at least 3 times higher, it's at 24%, right? So that's the key difference between the loans for the penalty part, right? So this is something that you got to be aware of. But again, with all the LTV in place, TDSR, MSR in place, right, your mortgage to service ratio, likely in two scenarios, you should be able to pay off your loans, right, throughout your lifetime, unless you are really out of a job and unable to work, and for a long-term basis, then I think that's the area you need to be concerned. And the only way to solve that is to make sure you have a disability income insurance. All right, so but that insurance is a whole different topic that we talk about. All right, we will be talking how you could use insurance to pay off loans as well. But again, those are very important things to have for yourself. Now, taking up loans, you also want to insure them, the outstanding amount, and also the ability to pay off in case you don't die. Okay, now so back to HDB and bank loan difference, right? Now HDB, again, there's no early repayment penalty. Okay, so meaning say you can redeem your loan anytime. So for HDB loan versus bank loan, this is another glaring difference, right? So there's no early repayment penalty for HDB loan. Meaning to say you can take your loan out anytime. You can redeem your loan almost like next month, the month after, right? You don't have to wait 6 months, 1 year, or 2 years to redeem those loans or refinance those loans. So there's no repayment. So meaning to say you could take the loans out to somewhere else any point in time. Now, whereas the bank, they usually have a lock-in period, and with that lock-in period, there's a repayment penalty. So likely it's going to be 2 years. If you need to redeem your loan within the first 2 years of the loan, they will probably charge a very small amount, like 1.5, 1.75%, right? So depending on the bank's contract. Now this is where, if you're not sure you're going to rent your house or to sell your house, then you may not want to recommit a loan, right? Because this is the part that you need to know. The risk is that if you to sell your house quite immediately after refinancing it, then this is the additional 1.75% that you need to pay the bank off for redeeming the loan early. Okay, so but if you strike lottery, right, you win the big sweep, the total, you got so much money and don't know what to do, then of course, clear off your loans, pay that penalty, or at least delay it after your lock-in period. Okay, so this here is the summary, right? Loan eligibility, TDSR, right, 60%, MSR at 30%, then your interest rate differential, right, down payment differential, and of course the late payment penalty differential. So this can be downloadable, right? So we'll send you a copy of this for your reference. Why refinance now, right? By now you know that I've already said this, the writing on the walls are absolutely clear. This is a fantastic time to refinance your property, right? There are so many reasons why, but the key ones is that SIBOR have reached a new low since 2011, right? And we expect the rate to remain low. Now here's why, right? In the evening there was a news, and this is the news. Let's watch the news together.